Are you worried about the impact of the global economy on your finances? With the global economy facing unprecedented challenges, understanding how to protect your finances and investments is more important than ever. Warren Buffett's decades of experience and proven track record make him the perfect guide to navigating these uncertain times. In this video, I'll explain the 6 biggest mistakes you must avoid in safeguarding your financial future. Avoiding panic and emotional decisions. My fellow investors, let's dive into the first lesson from Warren Buffett. During a recession, it's crucial to avoid panic and emotional decisions. Buffett famously said, "The stock market is a device for transferring money from the impatient to the patient." That's right, folks. If you're patient and don't let your emotions control your decisions, you can make money in the stock market.
You can't really fail at it unless you buy the wrong stock or just get excited at the wrong time. But if you own a cross-section of America and you put your money in consistently over the years, there's no comparison against owning something that's going to produce nothing.
But why is it so important to stay calm during a recession? Well, think about it. When the stock market falls, it's easy to get caught up in the panic and start selling your stocks. But that's precisely the opposite of what you should be doing. You should be buying stocks when they're on sale. Let me give you an example. Say you've been eyeing a particular stock for a while, but it's always been too expensive for you to buy. Then a recession hits and the stock price drops by 50%. Will you panic and sell your other stocks to cut your losses? Or will you seize this opportunity and buy the stock you've been waiting for at a massive discount? If you let your emotions control your decisions, you'll miss out on fantastic possibilities. Instead, remain calm, be patient, and wait for the right time to move. Buffett has been doing this for decades, which worked well for him. Of course, it's easier said than done, but if you can train yourself to be patient and avoid making emotional decisions, you'll be well on your way to becoming a successful investor. So please, take a deep breath, don't panic, and let's make some money. Don't stop investing. It can be tempting to hold on to your cash and wait for things to improve, but there are better strategies than that. During the last recession, many people got scared and stopped investing altogether. They saved a lot of cash and thought that they would be better off waiting until the market stabilized. But what happened? The market rebounded and they missed out on many potential gains. You might think, but wait, isn't it risky to maintain funding during a slump? Won't I just be throwing my money away? Not necessarily. Financing during a slump can lead to some significant long-term gains. Think like this. Stocks are on sale when the demand is down. You can buy great companies at a discount and watch as their value increases. Sure, there might be some short-term volatility, but if you're investing for the long term, that shouldn't bother you.
You do not have to know as much about accounting or stock market terminology or whatever else it may be, or what the Fed is going to do next time and whether it's going to raise rates 3 times or 4 times or 2 times. None of that counts at all, really, in a lifetime of investing. What counts is having a philosophy that you stick with.
Buffett himself is a big believer in this strategy. He's famous for saying, "Be fearful when others are greedy, and greedy when others are fearful." In other words, when everyone else is running scared, that's the ideal moment to begin supporting. Of course, that's not to say you should be reckless with your money. You still need to do your due diligence and make smart investment decisions. But don't let fear hold you back from sponsoring during a slump. You could make some serious gains if you're patient and have a long-term mindset. Keep sponsoring during a slump and you could come out on top. Avoiding excessive debt. In periods of financial tension, it's essential to be cautious with your finances. One mistake many people produce during a slump is excessive debt. It can be in the form of credit card debt, loans, or mortgages that are too large for your income level. Taking on more debt when times are tough is tempting, but this can lead to long-term financial problems. Only when the tide goes out will you learn who's been swimming naked. In different terms, when the economy is good, people can get away with taking on more debt than they can handle. To illustrate the importance of avoiding excessive debt, let me share the story of my friend Sarah. Sarah was a successful businesswoman who had built up a comfortable savings account and had no obligations. But when the recession hit, her business took a hit, and she began to worry about her financial future. She took out a large loan to invest in a new business venture that she thought would help her recover her losses. Unfortunately, the business venture didn't go as planned, and Sarah could not repay the loan. She found herself drowning in debt, and her credit score suffered. She had to declare bankruptcy and lost everything she had worked so hard for. Sarah's story is a cautionary tale about the dangers of taking on too much debt during a recession. When times are tough, it's easy to feel like you need to take risks to get ahead, but those risks can have long-term consequences. Avoiding excessive debt is crucial in a recession. It's essential to be cautious with your finances and take on only what you can handle. Remember, the economy is cyclical, and what pushes up must reach down. By staying financially responsible and avoiding excessive debt, you'll be better prepared to weather the storm and come out stronger on the other side. Don't follow the crowd. Getting caught up in the panic and following the crowd can be accessible during a slump. We attempt to be fearful when others are greedy, and to be greedy only when others are fearful. Thinking independently and not following the crowd during a recession is crucial. Firstly, the public may only sometimes be correct. People may be driven by fear, panic, or misinformation, leading to poor decisions. If you follow the crowd, you may make the same mistakes as everyone else, causing you to miss out on potential gains or lose even more money. On the other hand, if you think independently, you can make informed decisions based on your research and analysis. You can take advantage of the opportunities that arise during a recession, such as buying stocks at a discounted price or investing in companies positioned for long-term growth. By doing so, you can reap the benefits of your smart investment decisions. Thinking independently also means not getting swayed by the opinions of others, whether it's your friends, family, or the media. It's essential to research and make decisions based on your financial goals and risk tolerance. Following someone else's advice can lead you down a path that may not align with your long-term financial goals. Thinking is crucial during a recession to avoid making poor decisions based on fear and panic. By doing your research and analysis, you can make informed decisions that align with your financial goals and potentially reap the benefits of intelligent investments. So, don't follow the crowd blindly. Think for yourself and stay focused on your long-term financial goals. Avoiding short-term thinking. Imagine you're taking a stroll on a sunny day in the park. Walking by a tree, you notice a group of people relaxing in its shade. Have you ever stopped to think about the fact that someone planted that tree many years ago? That someone had the foresight to invest in the future, not just for themselves, but for others. Warren Buffett has a similar philosophy when it comes to investing. He believes in planting seeds for the future and thinking long-term. It's easy to get caught up in the chaos of a recession and focus on short-term gains or losses. But if we take a step back and think about the bigger picture, we'll realize that investing in sustainable opportunities can pay off in the long run. Think about it. During a recession, many people may be selling off their stocks in a panic, causing prices to drop. But what if you invested in a company that produces renewable energy, or a company that provides essential services like healthcare or utilities? These industries may not experience the same drastic fluctuations during a recession and will continue to provide value even after the economy recovers. Buffett's quote, "Someone sitting in the shade today because someone planted a tree a long time ago," reminds us that the decisions we make now can significantly impact our future and the future of others. It's important to think beyond the immediate situation and invest in opportunities that can grow and provide value over time.
You've got a big tailwind if you've invested in America over time. I've had a huge tailwind. I would say that I hope our main message is to stay away from trying to trade stocks or do things that are kind of self-destructive and just let America do the work for them.
Thinking long-term and investing in sustainable opportunities during a recession is crucial. By doing so, you'll be planting seeds for the future and reaping the benefits for years. Don't ignore the importance of cash. It's the middle of a recession and they hit you with a sudden emergency requiring significant money. Without cash reserves, they may force you to take on more debt or sell off assets at a loss. This is why having cash reserves is so crucial during a recession. While investing all your money during a bull market may be tempting, having a rainy day fund is essential to protect you from unforeseen circumstances. It is especially true during a recession when job security and financial stability can be uncertain. Having cash reserves can provide a safety net and help you weather any storms that come your way. But how much cash should you have on hand? Experts recommend having at least 3 to 6 months of tenancy fees saved in a liquid savings account, such as a high-yield savings account. It can help cover basic expenses such as rent, food, and utilities in case of a job loss or other unexpected events. It's also important to note that having cash reserves doesn't mean you're missing out on investment opportunities. Cash on hand can give you the freedom and flexibility to take advantage of potential investment opportunities during a recession. So, whether you're just starting to make your crisis reserve or already have cash reserves, remember that having a financial cushion can provide peace of mind and protect you from unforeseen circumstances. As the saying goes, it's better to be safe than sorry. So that's it. According to the legendary Warren Buffett, we've discussed the 6 mistakes to bypass during a slump. Recall, avoiding panicking and investing during tough times is essential. Avoid excessive debt and keep your cash reserves up to prepare you for unforeseen circumstances. Always think independently and don't follow the crowd. And invest in sustainable opportunities for the long term. Remember, someone's sitting in the shade today because someone planted a tree long time ago. So keep planting those seeds. Warren is one of the most successful investors of all time, and his experience and mistakes during past economic downturns can provide valuable lessons for all of us. By learning from his wisdom, we can avoid making the same mistakes he did and be better prepared to face the challenges of a recession. Staying informed is crucial, as knowledge is power when making intelligent financial decisions. Keep up with the latest news and trends so that you can make informed decisions based on accurate and current information.
If you're going to live a long time, you have to keep learning.
Yeah.
What you formerly knew is never enough. So if you don't learn to constantly revise your earlier conclusions and get better ones, I always use the same metaphor. You're like a one-legged man in an ass-kicking contest.
Making informed decisions also means taking a long-term perspective and avoiding impulsive actions with negative consequences. Resist the urge to panic and instead focus on your long-term goals and strategies. Take advantage of future financial insights and advice. Hit the subscribe button, smash the like button, and share this video with your friends and family. Your comments are also highly appreciated, so leave one below and let me know what you think. And remember to check out the following video on our end screen for even more valuable tips and tricks to help you navigate the complex world of finance. Thank you for watching, and I hope you've enjoyed my video on the 6 mistakes to avoid during a slump. Stay safe, stay informed, and stay invested.